Mutual fund industry saw its total assets under management or AUM reaching 27 trillion rupees at November end from 23.5 trillion rupees in November 2018, as per data released by AMFI yesterday. Let's do a three-point analysis of what has really led to a 15% growth in assets on a year-on-year basis. 1. Inflows through SIPs continue to rise. Well, notwithstanding the ebbs and also flows in aggregate mobilizations of mutual funds, the SIPs continue to remain favored among the retail investors. While the year-on-year rise is 15% in AUMs, the sequential rise was also recorded at 3%. Now, while this is indeed remarkable, the devil lies in the details. Well, the growth in the total AUM in November was mainly led by inflows into debt funds. Net inflows into equity funds, the most awaited and most important data point, fell significantly. However, it is not a big concern as yet, as the underlying trends are very positive, indicating that the cyclicality in the equity mutual funds. 2. What are the key takeaways from the equity flows then? Well, net inflows into equity mutual funds, including closed-ended schemes, was just 933 crore rupees as compared to over 6,000 crore rupees in the previous month. Now, the monthly net equity inflows have actually come off significantly from the peak of over 20,000 crores seen in November 2017. Now, this was the increase in redemptions that has actually led to the weak net inflows. The Nifty touching an all-time high in November could have also triggered some profit booking and withdrawals from the equity funds. The increase in redemptions can also be attributed to the fading equity outlook amidst domestic macroeconomic concerns and the weak global cues. Now, investments in equity funds through systematic investment plans or SIPs, which is relatively sticky, continued to hold the fort with 8273 crore rupees of SIP funds mobilized in November. While the overall equity flows have been weakening, mutual funds industry hasn't really witnessed cancellation of any SIPs or significant SIPs. 3. What's the outlook going forward then? Well, the stability in SIP contribution has been a key success story of the mutual fund industry in the past couple of years. Now, if the current monthly run rate of SIPs of 8,000 crore rupees plus is sustained, the mutual fund industry will receive an equity inflow of at least around 1 lakh crore rupees in the current financial year, which is quite sizable. Now, overall, the monthly flows in November also show that not only the assets management industry has really come of age, but really retail investors also, who have traditionally invested at peak of the markets and withdrew funds following a year of negative returns, have truly matured right now. Rising share of individual investors also needs to be seen.